How's it going, everyone? It is Andre Williams, and over here we talk stocks and we focus on one thing. Always protect your profits. We also got to put in the disclaimer. I'm not a financial advisor and this isn't financial advice. So just know when you do invest, you're doing it at your own risk. And you know what time it is. It is time for the joke of the day. If you're new to this channel, just want to let you know we do this 5 days out of the work week. Maybe you had maybe you had a stressful day, or maybe it was the market conditions. Well, you came to watch this video, plus hear one of my corny jokes. Here it comes. Why won't skeletons fight each other? They just don't have the guts. Pretty corny, right? But anyways, what we're going to be talking about today is NIO. NIO is one of my high conviction plays. We talked about this stock on this channel. I'm actually going to do it a lot more. But before we actually get into it, let's go over the agenda. If you're new to this channel, just want to let you know, we also have timestamps down below in the description to make navigation easier. But if you are a shareholder or you're considering to put in a position, I highly suggest you watch this whole video. So the first thing that we're going to be going over are the positive catalysts going on for NIO and what is coming up. Why does this matter? Because we're seeing a lot of volatility in the tech sector, but I want to make sure you guys keep this on your radar if you are considering it. The second thing we're going to be doing is a technical analysis. We want to know, what is the price action? What is a good price to actually buy NIO at to make sure that I'm not overpaying? So we're going to cover that. And then after, we're going to be taking a look at the order flow distribution. How much buying and selling is going on amongst institutions in regards to the large scale orders? I think this is very key to know, because then you could see, well, institutions, are they bullish or are they not? And then after, when all of that is done, I'll be giving you guys my final thoughts. So let's get into it. So we're now in Yahoo Finance, and I'm going to be going over this article, which comes from TipRank. So positive catalyst revving up for NIO stock. After a big run-up last year, electric vehicle stocks have been in a correction mode. This seems temporary because positive industry tailwinds are likely to sustain. According to Deloitte, the global electric vehicle industry is likely to grow at a compound annual growth rate of 29% over the next decade. Considering the growth outlook, investors might consider exposure to electric vehicle stocks on intermediate corrections. So that's actually part of the reasons why I'm sharing this article, and just seeing the prices of where NIO's at and where it could end up is part of the reasons why I want to bring it back on your radar. Let's continue. Earlier this year, NIO stock touched a high of $66.90. Since that time, valuation concerns coupled with a semiconductor shortage have resulted in a steep correction. However, it seems that the worst might be over for NIO stock. At current levels of $33.81, the stock might be worth considering. There are several potential catalysts for NIO in the coming quarters. Expansion triggers potential stock upside. Over the next decade, China is likely to maintain a leadership position in the electric vehicle market. After China, Europe is expected to be the next largest growth market. Therefore, it is not surprising that electric vehicle companies are focusing on European expansion. Tesla is already building a gigafactory in Europe, which is likely to commence production in early 2020. 2. XPeng, which is NIO's competitor in China, has already commenced the delivery of electric vehicles in Norway. Not to be left out, NIO is planning an expansion into Europe in the second half of the year. As of March 2021, NIO had a robust cash buffer of $7.3 billion. Strong financial flexibility is likely to help the company in planning an aggressive expansion in several European countries. Initially, the company will be launching its vehicles in Norway. This does not come as a surprise, as more than 50% of cars sold in Norway last year were electric cars. NIO also has plans for expansion in the US. That's unlikely to begin this year, but the key point is that expansion into new markets will ensure that vehicle deliveries remain robust. The company is already building a new plant in Ixtingao Industrial Park in Hefei. This will cater to the incremental demand from China as well as from international expansion. Positive indicators. From a financial perspective, NIO reported a vehicle margin of 21.2% for Q1 2021, as compared to a negative vehicle margin of 7.4% in Q1 2020. Even on a quarter-on-quarter basis, the company's vehicle margin expanded. With increasing vehicle deliveries, vehicle margin will likely continue to improve. It's also worth noting that the company reported an operating level loss of RMB 295.9 million in Q1 2021. In the same period last year, operating level losses were RMB 1.6 billion. Clearly, there has been a significant improvement in operating margin. And I really do think this is key for shareholders and investors to really know about. The fact that they've been able to reduce this and make improvements bodes well for the future. Let's continue. With cost-cutting operating leverage, NIO will likely achieve operating level profitability in the next 1 to 2 quarters. Once operating margins improve and NIO is able to report positive operating cash flows on a sustained basis, the stock is likely to trend higher, and I completely agree. From the perspective of sustained growth in vehicle deliveries, NIO's battery as a service is a key reason to be bullish. The biggest advantage of BaaS is that it significantly reduces upfront payments for buying an electric car. The price advantage gives NIO an edge over its peers. Further, with a monthly subscription fee, customers can avail themselves of battery swapping services or upgrades. Additionally, NIO plans commercial delivery of its first sedan, the ET7, in 2022. Given the expansion plans, the sedan is likely to be available in China and Europe, and this is another trigger for upside in vehicle deliveries. Wall Street's take. According to TipRank's analyst rating consensus, NIO stock comes in at a moderate buy with 7 buys and 3 holds assigned in the last 3 months. As for price targets, the average analyst price target is $60 per share. So literally that's almost double the current price of where it's at right now. So that's implying around 77.58% upside potential from the current levels. Concluding views. Overall, with a strong financial profile, positive cash flows, investment in manufacturing expansion, and an international presence, NIO stock looks attractive for long-term investors. Taken together, it's a positive catalyst to paint a hopeful picture for the automaker's future. I really did like how this article was put together, and it's something we really need to understand and realize. And if you have been considering to get into a position, continue to look at it, do your homework and due diligence. But NIO is definitely looking great for the long term to capitalize on the EV sector growth. So we're going to be doing a technical analysis for NIO. So let's see how it closed on the day. So it closed at $34.33, being up 2.60% on the day. On the low, it tested $33.64, and then on the high, testing $34.51. So when we take a look at our charts, we want to look at our indicators here, and from what we're seeing, it's definitely looking bearish. It is below the 100-day, the 200-day, and as well as a 21-day EMA. So taking this into consideration, if we take a look at the RSI down below, it is around 41. We already know if it's 30 or below, it is oversold, but at the same time, it's oversold a little bit because it is below the fair value of 50. So taking this into mind, if you believe in the long-term prospects of NIO, then definitely it's a buying opportunity at the current prices of where it's at. If we take a look at recent areas of support where it could potentially pull back to, you want to be looking out for this $32 level. Will this level ever end up breaking? Hey, if there's more volatility and it decides to pull back, yes, this is possible. We've seen this in the past as of late back here on the 13th. So just seeing it get to that area of around 30 bucks, I do believe in this range of 30 between 34, it's definitely not a bad idea to be building out a position in NIO. We do see, as far as the 52-week high is concerned, it's gotten up to highs just under $67. And I look at this play, if you're going to be holding it for at least 2 to 3 years, no doubt in my mind you'll be able to double your money at the current prices of where it's currently at. But so far, since it is looking bearish, do know if we want to see a bullish trend going towards the upside, I want to see it coming back to reclaiming the 200-day right here around $37.89. But hey, I think it'll look really good if it gets to $38, because if it gets to 38, I could definitely see some strong momentum and seeing how well it would test $40. So now we're going to be taking a look at the order flow distribution for NIO. So we take a look at the inflow today was at 329, and if we take a look at the outflow, was at 281. Large scale orders came out to 8, medium orders came out to 225, and small orders came out to 95. On the outflow side, we had 4 large orders in regards to sales. We also had 192 for medium, and we had 85 for small. If we take a look at May 20th, which was today, in regards to large scale orders in the last 5 days, we have 3,982 on the inflow side. So what this tells us, institutions are definitely bullish on NIO, and they are loading up while the price is cheap. We already know NIO has tremendous amount of upside, so I'm not really mad at them for actually doing that. So now let's get into the final thoughts. Before we get into the final thoughts for NIO, I want to go over the analyst price target with you guys very quickly here. So we have, as far as overall upside, it is at $60, so they're seeing just under 75%. On the low, they have it at $38. Currently, it is at $34. So it's even below the lowest price target. On the medium, it is at $60. And then on the high, it is at $81, which is more than double the current price of where it's at. Taking all of this into account definitely does show that NIO is an attractive buy here. We know, as far as China is concerned and that EV market, there's definitely some big time opportunities for NIO. Also, going into Europe and going into Norway, where 50% of the cars sold are electric vehicles, is going to be huge in their overall growth. We also do know that NIO is really trying to propel itself as a lifestyle brand. They just don't want to be known as, well, you know what, being EV car makers. So putting all of this together, taking a look at the analyst price targets, and also looking at the compound annual growth rate for the electric vehicle market, hey, NIO is definitely going to be one of my holdings. I'm bringing this just to your consideration so you can have it on your radar, because I can't tell you what to do because I am not a financial advisor and it is your money. But do keep in mind of the fact, I believe, in my personal opinion, this stock should be able to get to $60 by next year or within 1 year. And if it doesn't happen, then it will be happening in the following year. But I'm very bullish on NIO, and I know within 2 years, this is going to be $100 stock. Call me crazy, say what you want to say, but that is my conviction, and it's part of the reasons why I'm in this play. Hope you guys enjoyed this video, and we'll be talking real soon.